morning report. I've decided to make it 3 things in markets today. Hopefully that'll get us through a bit quicker, make it more relevant for the audience, for traders and anybody else that's interested. And that way it's more useful. So last night was a big night on US stocks. We've got the S&P 500 up 100 points. That's a good story. Asia did really well yesterday. The Aussie market ripped. Europe missed that boat, didn't get the memo. NYSE floor Governor Rich Barry sent out a note saying it's the first day of the Santa Claus rally, and that could well be the case. It seems that markets, US data's get a little bit weaker. It's not surprising. The sweet spot's gone. US bond markets rallied. The US dollar's under pressure. And I'm going to draw out those themes in the 3 charts I want to look at today. So the first chart I want to look at, and I'll share my screen with you as I do this. The first chart I want to look at is the Aussie dollar. Now, the Aussie dollar has been getting quite a bit of interest lately. And you can see here that after being in a long downtrend for since basically September last year, it rallied out. What we've seen, if I blow this up a little bit, we've seen a break up, a comeback, a retest, and now we've shot higher. Now that, let's get rid of these because we don't need these, are old now. Not that I necessarily always get rid of old lines, but when they don't add anything to what I'm looking at, they are no longer necessary. And you could argue, some might, that this is a head and this is a head and this is a shoulder and that's a shoulder. But either way, the focus has been back to these October highs. We're not far off now. 73.80 is where we are looking for. And the market this morning is around the 73.30 level, as you can see. That's going to change the narrative around the Aussie dollar if it can get up through there. There's been a little bit of chatter, TD Securities, I know the ANZ, all starting to say that the Aussie dollar's gone too far, commodities have continued to crash, and that the RBA is going to have to think about putting the door more ajar because the Aussie dollar is unwinding a lot of the good work it's done. I don't think that's the case unless or until 74 cents breaks. Now, it's highly likely, given that it's time for a US dollar reversal, that could happen. But we're now getting to the zone where the Aussie dollar is going to find some resistance. If we have a look on the weekly chart, it's essentially just going to be a short-term version of that. You can see my slow moving average is just trying to get that 73.67. So it's in this same zone. If you get the Aussie up and through, and the way I'm trading, if you get the Aussie up and through sort of 67.90, it's going to run, and it's going to run hard. And you are going to see it in the sort of the 75, 76 cent region. I like the Aussie a lot at the moment. We'll see how it goes. GDP is a big hurdle at 11:30 today. And of course, Governor Stevens could say something which could derail things. If we turn to the euro, and I'm really hopeful that my screen is working properly. I've shut everything down so that we can focus on this. That's a nice rally. If we have a look at it in weekly terms, this trend line here that it's trying to work off goes all the way back to 2000. Shrink it down a bit. So it's a nice place for a pessimistic crescendo. I think the key here is that the sweet spot is past for the US economy. As I wrote in my AxiTrader afternoon report yesterday, 106.70 was where I was looking for it to move. And you should look at my AxiTrader afternoon report. I'm not going to, say I'm a guru or anything, because anybody who's traded knows that there's no such thing as a guru. We all just toil and try to make some money. But 106.70 is the level I'm looking at. US data surprise index is starting to print negatively. That is, data's undershooting. That's a natural consequence of everybody getting too bullish. They then have to recalibrate. So, and we've seen some data in Europe has been a little bit better. So Euros 106.70. I'm not bullish unless or until that breaks. If 106.70.80 breaks, then I am looking for 107.90. I'm still long. My system's still long. We'll see how that goes. Obviously, the ECB is going to be a big event risk later this week. Turning to the Australian stock market, depending on which machine I seem to look at, I seem to get this trend line in different spots. But if we put it where it probably should be, which is off that high there, which is also, you can't really see this green bar, but that's a bar that basically said the market did nothing. Yesterday, the Aussie moved up and through, but couldn't hold above it. Futures expectations this morning are for a small 2-point rally. Not sure about that. You know, GDP is going to be important. I think GDP is going to be relatively solid. We might even see a print above 1%. That's going to be good for the stock market, I would think. But the stock market's been working through a wall of worry, company specific, all that kind of stuff. That's not to say I'm overly bullish, but to me, there are further gains in this stock market coming. I don't need these lines anymore. I can get rid of them. And so let's just think about where we're headed on a weekly basis. You've got that. Sorry, I didn't mean to kill that one. You've got that line. I'm probably going to guess that a move to 53.20, something like that. And if that was to break, you know, you've got another 50 points in it. So they're the three charts I wanted to share with you today. Lots of event risk, lots of things going on. Governor Stevens at 11:12, 18 minutes before GDP. Obviously, he wanted to be finished speaking by GDP. GDP at 11:30. Other data out around the world tonight. Keep an eye on things, but it looks like we are starting to get a bit of a subtle turn, and the rally in US bonds last night and the sell-off in the US dollar tells me, along with the fact that US data, the ISM manufacturing last night was below 50, is starting to print and change expectations. That's made some people think that the Fed move in December is no longer a lock. I disagree with that fundamentally. I think it is a lock, but I think they are going to be supremely dovish, and the dot point that comes out might suggest a much more muted path of rate hikes. Have a great day. That's it from me. You can find me on Twitter at Gregory McKenna. You can find me at Business Insider. You can find me writing at the AxiTrader blog these days, more on trading. Business Insider is more of a journo. And of course, I've got my own website, which brings together pretty much everything and then refers back to where it came from. So have a great day, good trading, and bye for now.